Now let's bring in Jay Woods, Chief Global Strategist at Freedom Capital Markets. He joins me here on the floor of the New York Stock Exchange at the desk. Jay, the other Woods, no relation, but always good to chat with you.
Yeah, it's good to be in the woods here this morning.
Yeah, Woods squared here. All right, so I was reading your Monday morning note, as I always do, and you posed the question at the top, who is the most important person for the markets this week? Harris, Trump, or Powell? And you say it's Powell. Why?
I think it's Powell in a landslide. I mean, I know we're going to be focused on the election, as we should. My God, let's all go vote. But who's dictating monetary policy? Who's been the one driving this bus? It's been Jerome Powell. So we're looking for a quarter-point cut this week. And then that 2 o'clock press conference, what happens afterwards? Now, yes, there are going to be people, well, if it's Trump, he may influence, Powell's term to the end of 2026. But let's not forget, Trump was the one that put Powell into place. So right now, Powell has been able to avoid the political angle even when Trump was president. So he's been through both of these administrations, if you will. So I think Powell's policy at the end of the week, as we know, as I've said many times before, the market does not care about your politics. It does not matter who's president. If we have a divided Congress, I'm watching those races a little closer. I think that would bode well for this market. But this has been an unprecedented run. This has been the best run we've had going into a presidential election ever. So I think Jerome Powell will be what we focus on here outside of our own personal political beliefs.
Okay, so a few things to break down there, but just bringing it back to the election for just a minute. Market doesn't care if Harris or Trump wins. Does the market care if there's a clear winner this week?
Market would love it if there's a clear winner this week.
But if there's not, then what?
Well, let's go back. We have two examples, 2016 and 2020. 2016, both involved President Trump. 2016 was an election outcome that we didn't expect. Trump beat Clinton. We were limit down coming onto this floor that morning. I remember I was literally right behind us. And what happened? Cooler heads prevailed. We hit the lows on the open and we rallied not just that day, but into the end of the year. 2020, controversial, highly contested election. What did we do? We rallied 2 days before it into the end of the year, and then on January 6th, something happened on the Capitol. I think it was an insurrection. What did we do? 2 days later, all-time highs in the S&P 500. So, yes, we were very politically charged in 16 and 20, as we are now. But I think at the end of the day, the 500 leaders at the S&P 500 companies, they're the ones we want to watch. Those are the reactions, the results that matter, how they're doing quarter to quarter, and how Jay Powell is lining them up to continue to do well with his Fed rate policies.
Okay, so bringing it back to Powell then, in terms of, this market widely expects a 25 basis point cut later this week. I wouldn't say the inflation data and even the jobs data is really forcing the Fed's hand at that. It's been pretty strong. Friday was obviously, impacted by some other external factors there. So if Powell decides to hold, what does the market do then? I'm disappointed.
Well, first of all, if they hold, considering there's a 97% chance of a cut, I'd be surprised. I think that one's telegraphed in. It's the press conference. Are we going to get another 25 basis points? Because a lot of people anticipated 6 cuts. I don't know where the number came from as we came into this year. It looks like we're going to get 3, 25 in November, and then we hold because, as you said, the data wasn't really indicative of, the jobs numbers continuing to climb, we need to cut. The jobs was a little wonky because of the hurricane, because of the Boeing strike that continues. So they'll get a pass this time, but we expect 25 basis points. If we don't get it, then I would expect the market to sell off a little bit because that 10-year has been the one thing that we're not talking enough about. It's raised 60 basis points since the 50 basis point cut. If that continues to go higher, it's coming in now, and I anticipate it to continue to come in, then we may have issues with the equity markets going forward.
Yeah, it certainly seems like a bit of a market headwind for sure that rates are on the rise, despite the fact that the Fed is in this cutting cycle, or yields are on the rise, I should say. In terms of the market, though, November does kick off what's seasonally a very strong time for the markets. However, this isn't a market that's followed these kind of seasonal historical patterns. September didn't have the weakness that we typically see. October didn't have the crazy election volatility that we often see. Does that mean that the Santa Claus rally is at risk because the market's sort of going against those seasonal patterns?
I'll gently push back because you are right, but October was down. We broke a 5-month winning streak. September, that was the outlier. That was a little crazy. The VIX has been elevated. The VIX is over 20 consistently for a couple weeks now. So there is some angst. There is some investor nervousness. But no, typically it has not happened. But up until this point, we have seen slow and steady. And this is an interesting stat. Trump won in 2016. 2017, headlines crazy. You know, Trump's in president. Everyone's going nuts. 2017 was the most boring, bullish market I've ever seen. We didn't have more than one drawdown of 5% the entire time. So slow and steady and boring, while it's not exciting for us traders here, it is good for our portfolios and it helps us sleep better at night. So maybe avoiding that September sell-off and the October volatility is a good thing. And we're set up to see that November historically is up 1.8%. Best month of the year. And what's the second best month of the year? December. So people will be repositioning their portfolios. They'll be looking at their, their income statements and seeing where they're missing out. You talked with Kevin before this segment about Constellation Energy. I think that's an interesting opportunity to buy something in one of the hottest sectors in the world, seeing how it's selling off a little so dramatically this morning. So I think November, December, we'll be set up to gear ourselves towards the third year of this bull market. We've already been in 2, and people are just starting to wake up to it, and they're going to have to rebalance accordingly.
So aside from seasonal factors or seasonality, what is it that moves this market higher into year end, and how does tech play a part? Because, of course, we've heard from the majority of the Mag 7 at this point. Are they what bring us to potentially newer highs?
Yeah, I think technology is going to continue to lead. I look at what Amazon did last week, and that was a knock it out of the park quarter. The revenue on AWS was much better than anticipated. Andy Jassy talked about his AI story. It looks like it's starting to pay dividends. And that was what was holding a lot of these Mag 7 stocks back. We're spending all this money on AI. We're not seeing results. Amazon looks like they're set up. They've cut costs, and now if you look at technically, get me a close above 200 for a couple days in a row. This thing is off to the races. So I look at the big tech stocks, and Amazon's a consumer staple, consumer discretionary. It's not considered a tech stock by the indexes, but as far as we're concerned, that is part of the leadership. Apple continues to be right off all-time highs. And then, of course, NVIDIA going into the Dow. People are a little worried about that. Yes, it's a little late for them to be included, but that is the biggest driver of all these stocks when it comes to technology. So I think technology will lead, but the growth is expanding. We're seeing other sectors start to pick up in the technology space. Watch software just breaking out, the IGV, and then watch cybersecurity. It's hit or miss with some of these stocks. We saw CrowdStrike take a hit, but Palo Alto continue to go higher. So I think those two sectors, when it comes to technology, will be the stories to watch going forward, regardless of who wins this election.
So was Amazon the earnings winner from the Mag 7 so far? Obviously, we haven't heard from NVIDIA yet.
We haven't heard from NVIDIA, but yes, so far it's been Amazon. If you want to include Tesla, had a great quarter, but it's given a lot of it back. But Amazon, to me, looks the best poised to go up. Google had a great quarter. Is it Alphabet? I don't know. Change your symbol, Google. But yes, Google looks fantastic. Microsoft struggling on the cloud side. Azure wasn't the numbers they wanted to see. Meta continues to grow, but right now those Mag 7 stocks, I think they've rested a little bit and they're poised to lead us again as we kick off the last 2 months and the beginning of 2025.
Any sectors you'd avoid right now?
I mean, energy, if you want to try to, catch a falling knife, maybe you go there if you're betting on political angst and, world problems, then you may want to take a shot on energy. It's so beaten down. Real estate, it should do fine if we continue to cut rates. Materials have been lagging. I would avoid those 3 sectors and go back to the leadership that we saw in the beginning of 2024 in technology.
All right, but Constellation Energy is an interesting play, you said, with this potential 8% pullback that we could see. We'll also hear from an AI high flyer and a previous AI high flyer this week that's had a huge fall from grace. Palantir and Supermicro. Bar obviously very high for Palantir heading into that report. I don't know what the bar is for Supermicro because they continue to disappoint. Your thoughts on those?
Palantir, buckle up. It's up or down 15% on average since it's gone public. You're going to see a big move. It's up over 100% since it went into the S&P 500. That goes back to September 5th. So it could be one of those stocks that could have a blowout quarter, and it may still pull back. because it is a little overextended technically. That would probably be a great buying opportunity. As far as Supermicro goes, there are too many red flags there right now. I would just avoid the name altogether. When Ernst & Young put out the statement and said they won't sign off on the financials, it's tough to say, you know what, let's jump in there. So I would avoid that. And they come out on election day, so good for them. They probably won't get many headlines when it comes to their earnings.
Yeah, based on the selling we've been seeing, I'd say a lot of people are avoiding. Just want to quickly ask you about this huge pile of cash that Warren Buffett is sitting on, because we will talk about Berkshire's earnings a bit later in the show. But we know Buffett and company sold some more Apple share. They've been selling Bank of America, and that pile of cash keeps getting bigger and bigger. Do you take that as a warning sign that Buffett's getting defensive or not?
Maybe he's about to get offensive. He's raising that cash. It is head scratching, but I look at it in a couple ways. One, Apple was his biggest position. He cut it by 100 million shares. He still has 300 million shares. It's about a third of his portfolio. It was well over a half. So any money manager knows you want to, diversify. And then Bank of America, he's been cutting that back. So those two holdings, he's narrowed. Yes, he does have the most cash since when? 2001. And what happened in 2001? We went on a little bit of a rally after a pullback. And then his highest allocation to equities is 2021. And that was the peak of this last bull cycle before we started again in October 2022. So I don't read too much into it, but I do get this antsy feeling before Christmas. What's he going to buy next? What gift is he going to give to this market? Because I don't think he's just sitting there to do nothing. I think he's looking for an opportunity and a couple names that may be off our radar. So it'll be interesting to see what he does with this cash surplus. He doesn't usually let it sit for too long.
Wait, a couple names off our radar are what?
Oh, I wish I knew. If I knew, I'd be buying them right now. No. Warren hasn't been very big into tech. Apple was his big and first deep dive into technology. Let's see if he tries to go into energy, nuclear power. That's what everyone continues to talk about. That's what Constellation has been looking into. But for me to guess what Warren Buffett and his team are looking into, I mean, they're buying Sirius Satellite Radio. I don't understand that, but they're buying a few other stocks as well. And that's what we want to know. That's what we talk about.
Yeah, that's the key. All right, Jay Woods, always appreciate you joining us. Thanks so much.
Thank you.
All right, that was Jay Woods, Chief Global Strategist at Freedom Capital Markets.